Most people think they're investing the right way. But what if I told you some of the most common beginner mistakes can quietly cost you thousands of dollars over time? And the scary part is, you probably won't even notice it's happening. You could be putting money in every single month, doing what everyone says is correct, and still be slowing down your financial future without realizing it. I've seen people spend years investing, only to look back and realize they made mistakes that set them back way more than they think. Not because they were lazy, not because they didn't try, but because nobody told them what to avoid. So in this video, I'm going to show you the most common investing mistakes beginners make, and more importantly, how to avoid them starting today. And if you've watched my last videos on how much you should invest and where beginners should invest their money, this is the missing piece that can save you a lot of money. The first mistake is waiting too long to start. A lot of people think they need more money, more knowledge, or the perfect time to begin investing. So they wait and wait and wait. But here's the truth. Waiting is one of the most expensive mistakes you can make, because when it comes to investing, time is more powerful than the amount of money you start with. Someone who starts with a small amount today can end up with way more money than someone who starts later with a bigger amount. Not because they're smarter, but because their money had more time to grow. Every year you delay is a year your money isn't working for you, and that's something you can never get back. The second mistake is trying to time the market. This is when people try to guess the perfect moment to invest. They wait for the market to crash, or for prices to drop, or for the right signal. But the problem is, nobody can consistently predict the market. Not beginners, not experts, not even professionals. And while you're waiting on the sidelines, your money isn't growing. You miss opportunities, you miss compounding, and sometimes you end up buying at worse times anyway. The reality is simple. It's not about timing the market. It's about time in the market. The third mistake is investing without a plan. A lot of beginners just jump in, buy a few stocks, maybe follow what they see online, and hope it works out. But investing without a plan is like trying to build a house without a blueprint. You might get lucky for a while, but eventually things fall apart. Without a clear goal, you don't know what you're investing for. You don't know how much risk to take, and you don't know when to stay in or get out. And that leads to emotional decisions, which is where most people lose money. The fourth mistake is following hype. You see a stock going up fast. Everyone on social media is talking about it, and it feels like you're missing out. So you jump in. But by the time most people hear about it, it's already too late. The early investors already made their money, and now you're buying at the top. Then the price drops, panic kicks in, and you sell at a loss. This cycle repeats over and over again. That's not investing, that's gambling. The fifth mistake is not being consistent. Some people invest once, maybe twice, and then stop, or they only invest when they feel like it. But consistency is where the real power is. Investing small amounts regularly, month after month, year after year, is what actually builds wealth. Not random big moves, not lucky trades, but discipline. But the biggest mistake of all, the one that quietly destroys everything, is starting and then quitting. A lot of people begin their investing journey feeling motivated. They're excited, they're consistent, they believe in the process. But then something happens. The market goes down, their investments lose value, or they don't see results fast enough, and they stop. They stop investing, they pull their money out, or they give up completely. And in that moment, they lock in their losses and miss the recovery that usually comes after. Because the truth is, investing isn't always exciting. There will be periods where nothing seems to happen, times when your money goes down, and moments where you start to doubt everything. But that's normal. The people who build wealth aren't the ones who avoid those moments. They're the ones who keep going anyway. So how do you fix all of this? It's actually simpler than you think. Start as early as you can, even if it's a small amount. Don't try to predict the market. Just focus on being consistent. Have a simple plan and stick to it. Ignore the hype and think long-term. And most importantly, don't quit. Because in investing, consistency beats perfection every single time. Most people don't fail at investing because it's too complicated. They fail because of simple mistakes like these. The good news is, now you know what to avoid. And that already puts you ahead of most beginners. If you haven't watched my video on how much you should be investing every month and where beginners should actually invest their money, make sure you watch those next. Because knowing what not to do is important, but knowing exactly what to do is what will actually grow your money. And remember, you don't need to be perfect to succeed in investing. You just need to start, stay consistent, and avoid these mistakes along the way. If you found this helpful, make sure to subscribe for more simple investing videos, and I'll see you in the next one.